markets are in a bit of a tizzy. You have both the commodity markets and the equity markets the world over celebrating the outcome of the Fed meet, as well as the, how do I say it, the resolution of the Evergrande situation. Maybe. At least the outcome is a bit better than what the worst fears of the markets were. Let's get in somebody who looks at the EM space, or who has looked at the EM space all his life very, very closely and continues to do that. Geoffrey Dennis, he joins us on the show a number of times when there are some large events. And this was as large a week as it could have been. And therefore, we thought it was apt to get his quick perspective on what he made of what the Fed did, and maybe what he makes of the Evergrande situation as well, now that there's a bit of an outcome in sight. Jeff, good having you. Thank you so much for joining in. Good evening to you. What do you make of the Fed commentary? Does it alter the landscape of financial markets, either in the US or for the EM space?
I don't think so. I think we knew this Fed taper was coming. Obviously, they haven't announced the beginning of it, but they clearly now are giving us a very strong hint that this tapering will be announced formally at the next meeting in the early part of November. And I think once again, the Fed has done a masterful job preparing the markets for this, which is minimizing the risk of the sort of taper tantrum that we had in 2013, when obviously Bernanke hinted about tapering that time, that part of QE at that time. Now, my view is that the surprise to me about the meeting today was that he implied, or he didn't imply, he said that the tapering could well be over by the middle of 2022, which implies that they're going to sell all of this, they're going to stop all of this buying of securities, I should say, by the middle of next year, which means it's going to be a relatively fast taper. And yet the fact that the market knew it was coming, the fact that it's been well signaled, the fact that it's clearly, absolutely clearly long overdue for them to taper, means I think the market reaction has been pretty muted. Basically, sell the rumor, buy the news. There's nothing to be worried about here because we need to get this tapering started.
Nothing on the rate activity as well that will that you think surprises either the US markets or the EMs negatively?
I think I'm a little surprised by the interest rate activity, in the sense that the consensus of the Fed appears to be they may raise rates in 2022. I'd be surprised if they do. I think it's probably more likely that you'll get a rate hike in 2023. But I think the point is that what they're doing, and they should do this, is they're separating out the tapering of QE from the interest rate decision. Now, to be fair, my view for a long time has been interest rates are too low. They're 5% negative in real terms, with inflation running at just over 5%. So we do need to move to higher rates eventually, but I wonder whether we might wait a little bit longer. Don't forget, this is not a Fed forecast 2022. It is just that the balance of the voting members of the FOMC are saying 2022 now, which is what the dot plot is all about. And therefore, we'll wait to see whether actually that happens. But certainly, of course, no imminent threat of a rate rise at all. Any rate rise is going to begin once the tapering process is over.
Again, the Fed preparing the markets very well. Jeff, what did you make of this whole Evergrande situation? And it seems to have reached a bit of a resolution state, but nothing is quite over until it's over. What do you make of it? Any impact that you reckon it can have as a contagion, or to maybe Chinese markets individually?
Well, it's certainly already had a very big impact, of course, on the Chinese market. It's been the latest negative news for China. And we've had a lot of negative news for China this year, being a big underperformer. And this is just the latest one. It's a huge issue because, of course, of the size of the debt, over $300 billion, and the size of Evergrande within the economy, and the property sector, of course, within the economy, close to 30% of GDP. Now, I think it's certainly too soon to say the situation's been resolved. Unless I've missed something in the last few minutes, we still don't know if they're going to make this dollar bond interest payment today, although I think there's some optimism that there'll be some resolution along those lines. But I still fall back on the fact that the debt situation in China, which everybody worries about, is of less concern to global markets than might appear to be the case, because so much of the debt is held by locals, so much of the debt is denominated in RMB, a local currency. They've got a lot of reserves, got a very high savings ratio, and the government can step in at some point and just deal with this by sort of bailing out Evergrande or helping them out in this situation. So I do not believe this is remotely close to a Lehman moment. And when you look at the price of debt, of the Evergrande debt, it will have gone up in price today, given what the share price has done. But given where the price was of Evergrande debt, yesterday, 25 cents on the dollar, a default with missing an interest rate was essentially priced in. So I think the worst of the selling is over for now. But restructuring this huge company without damaging the economy is going to be still a challenge, and that's going to take quite some time. And we're going to have to keep an eye on this, frankly, as we go forward over the next several months.
Got it. Jeff, lovely to have your views. Thank you so much, and have a good night.
Thank you very much. Thank you.
The pleasure was ours. Well, that's Jeff Dennis. And the Fed, he's saying, by virtue of the fact that it's prepared the markets for so long, almost all moves that are long expected are turning out to be non-events. And maybe a scare before, but on the day of the event and after that, it's not quite turning out that way. To be fair, it's been that way now for the last 2 or 3 meetings, wherein we've thought that, oh, this meeting is going to be the most important one, and eventually, while it may rock the boat a little bit ahead of time, post the decision isn't quite doing that, which is great news. By the way, look at the markets. Look at Asia, look at SGX Nifty. All should come up on your screen, taking off from where the US markets left off. I think we have a bit of green on the screen, and that should actually augur very, very well. Okay, you might argue that it's a bit of a mixed bag, but there's a larger tinge of green. You would have to say, don't look at Nikkei. Japanese markets are shut today. The others, which are on, are trading with a bit of green. The SGX Nifty should come up on your screen next, and you'll probably see a tinge of green out there too. So we should expect a decent start in the session today. The question is, can it hold on? And I think time will tell. Keep in mind, commodities too have actually got spurred on. I'll actually move straight to the trade setup. And I think let's leave what happened yesterday to yesterday, for at least for today, because time is short. But if you look at the trade setup, there is, I mean, obvious that, it's no brainer that the global slight risk on mood will actually spur the Indian equities higher today. So you'll probably see that. And tech and BFSI may lead. I think all eyes on tech because Accenture numbers come out today. And ahead of that, technology certainly stays in focus. Keep in mind, while we may not talk too much about it, almost all of the tech companies, leave TCS and Infosys out. HCL Tech is northwards of 1300, close to all-time highs. Emphasis was up yesterday. Birlasoft, KPIT. So tech is certainly in the driving seat. I think the commodity bounce back would help the metal stocks further in trade. I've been proven wrong here. I actually thought that commodities would see a bit of a pullback, but led by the Evergrande slowdown, so on and so forth over the medium term. But for now, they're not showing nervousness. So completely wrong, my assessment on commodities. But yeah, just thought I'll point it out. And I think most dealers are confident about the continuation of rally in the real estate space on the positional basis. Now, viewers, you've got to watch out for the real estate stocks. Here's some data points for you, right? Before we get to stocks in news. And I think you should watch out for the real estate stocks. But September has been the best monthly sales for real estate in Mumbai versus the last 5-year averages. And this follows the best August that we saw in 10 years. Now, if you've seen maybe an okay July, but a great August and a great September, can you just think of what are the numbers that the real estate companies based out of Mumbai will come out with? Add to that, we've already seen a spurt in Karnataka by virtue of this sales tax lowering down. So those companies are in focus too, and that constitutes nearly 80% of the listed real estate space, right? Then it leaves only DLF. And by virtue of the Godrej Properties response to their project, I think NCR2 is brimming. So the listed real estate space for the July, August, September quarter is actually set for fairly decent numbers, I would suspect. So do watch out for real estate stocks. Move on to stocks in focus today, and a bunch of them. It might be a long list, but bear with me, viewers, just so much to point out. So NMDC sale, Vedanta, no-brainers, iron ore, spike, and steel prices have shown a spike, and therefore you will see probably 99% you will see some impact onto each of these. So do watch out for these names. Adani Ports, not that this was under question, but they have acquired the 10% stake of Gangavaram Port from the government of Andhra Pradesh, and therefore they've completed the complete acquisition of Gangavaram Port for an equity value for 6,200 crores. Mind you, this 10.4% stake is not 6,200 crores. 10.4% stake is a separate transaction, but by virtue of acquiring this 10.4% stake, now the complete transaction value is 6,200 crores, and therefore this becomes important. It's a small error from our end, please excuse that. But yeah, this completes the whole transaction of Adani Ports. Some other small caps in focus. It's a 200 crore company, Fred and Pharmaceuticals, but it becomes important because Nikhil Vora has taken preferential allotment in the company. He's a very smart chap, small cap, micro cap, mid cap investor, what have you. Of course, has stakes in large caps too, but we all know that's track record of Nikhil Vora about buying large stakes in small companies, and then the company is doing really well. So this one will be in focus. Was up 20% yesterday. I won't be surprised if it's higher in trade today. Ahluwalia Contracts. It is a promoter transaction when the promoter sold some stake, and Aditya Birla Mutual Fund has bought that stake. Maybe this stock remains in focus too. Now, there are a couple of stories which led me to thinking of some of these names. So oil has cooled off a bit, but look at this story, and you might want to read it on our website. China has gotten into buying, aggressively buying LNG at arguably the worst possible time. Uh, and China is on pace to surpass Japan as the world's biggest importer of LNG. Now, what it does to gas prices overall is quite significant, and therefore I'll watch out for ONGC and Oil India, not for the crude uptick, but for the gas price revision, which is slated to happen in about 10-15 days from now. Remember, first week of August, we'll see the APM gas prices revised, and that should actually provide a big boost for ONGC and Oil India. The stocks have run up a little bit in anticipation. Maybe there could be more in store. You do your checks. Couple of brokerage notes and then some stocks in focus. So Z, you know, there are mixed views here, viewers. I'm getting you the published brokerage note, which is CLSA on Z, and they are maintaining a buy or rating a buy. The target price has been raised to 400 from 306. They are saying that Z's proposed merger is a positive, a favorable risk reward, big business synergies, and strong growth ahead. And they are pointing out the fact that the Q1 ad revenue was up 120%, EBITDA was up 59%. So all of this is positive. But I've heard a number of notes say that this deal after the con call seemed to be one done for the existing promoters, and they're very disappointed with the fact the promoter stake doesn't get diluted, but other minority shareholder stake does upon this merger. So mixed views coming in, but CLSA, a renowned brokerage, believes that it is a positive. So I've gotten you that. Credit Suisse on ITC, their outperform rating, target price has been raised to 280. Yesterday, I was talking about how some of the breakout trades and the laggard stocks and breakout trades should be kept focus on. This is a marquee house raising the target on ITC. They are saying that the cigarette volumes are now recovering well, and they expect a full recovery by Q3 as the consumer mobility comes back. So, well, do watch out for ITC in the session as well. Some other stocks in focus, either based on delivery. Okay, let's stick with this list first. And each of these have a piece of news to themselves. So Bharti, the rights issue been announced at 535 rupees per share. The belief is that Singtel will subscribe its full entitlement of the rights issue. So that should be a positive. IDFC, a lot of people are questioning my tweet yesterday about whether this is investor activism or no. Under the broad umbrella of investor activism, the point that we're trying to make is, or I was trying to make, is that investors and minority investors are now coming out and making their voice felt. I reckon it will be felt in the IDFC prices as well. Dish TV, again, Yes Bank has urged Dish TV to hold the EGM and revamp the board. So again, a case of shareholders right out there and telling boards and telling companies what they need to do. Escorts, I think a newspaper is reporting that Kubota may raise stake in the company, so do watch out for this one. And like I said, Z Entertainment, of course, remains in focus because of multiple reasons. Some other stocks, very quickly, I know I've gone on for too long, but very quickly, which had great delivery volumes yesterday, and you might want to watch out for some of these. And I think they showed a pattern because there was real estate financing, and there were some hotel companies like chalet hotels, etc. All of which, and tech. Remember, I was talking about it. KPIT Tech was up 6% yesterday. Chalet, Indian hotels, a lot of traction for some of these reopening trades. Phoenix Mills, for example. So do watch out for these. Last but not least, while everybody's saying that the worst of the chip crunch may be behind, I think yesterday Escorts management, or Volvo Eicher rather, not Escorts, Volvo Eicher management told us that the chip shortage is far from gone. I think there's this chart on a story on BloombergQuint which says that the chip crunch has grown worse as the wait times have hit a record 21 weeks between companies placing an order for the micro semiconductor chips and it actually culminating in a delivery. The time has actually grown to 21 weeks, which is really, really long. So therefore, the resolution may not be in a month or two. It might be still some time away. So be mindful of that. Thanks so much for tuning in today. Have a great day ahead, viewers. Stay safe, and if you're stepping out, please stay masked up.